Do you have the desire to turn your portfolio into $1 million portfolio? Are you already making great money? You just don't have the playbook or the direction to how to guide that money? If so, this episode is going to be for you, because I am going to literally break down step by step how you can go from making $100,000 a year to building your first $1 million portfolio. Let's dive in today. Welcome back to The Difference, everybody. I am so excited for this episode, and I think I'm excited for this episode out of, I would say, out of selfish intentions, because 10 years ago, I was making over six figures, over $100,000 a year, but I invested nothing. I would say at that point in time, all I had was maybe some whole life insurance policy. I think I had a Roth IRA, but I may have only had maybe $1,500 in it. I had no 401k. I didn't own any real estate. So I really didn't have much of anything. And I was just working my way out of $100,000 of debt. And so my desire was like, six figures was cool, but I always wanted to scale, and I always wanted to have $1 million portfolio, but I didn't know how to do it. So when I created this episode for you, it was a little bit out of selfish intentions, because it was so much of the questions that I asked myself so many years ago, but now I have the answers to. So today I wrote down literally 2.5, 3 pages of notes, and I want to make sure that you walk away from this episode with actionable items and actionable steps and tools that you can start to implement literally today. I want you to walk away and be so happy about this conversation that you go tell everybody and say, you got to go connect with Jamil and start to listen to his content, because he is giving the game. So here's what you need to know. I want you to write this down. If you're making $100,000 and don't know where your money is going, it is literally like pouring water into a bucket full of holes. That's exactly how I felt. And I got to tell you, that's exactly how a lot of our students feel as well. 2 stories before we jump into it. We are helping an entrepreneur that has one of the largest safety security companies in Southern California. And they protect all of these celebrities and athletes and, movie stars and stuff like that, right? So this is a serious protection company. And when I started working with the founder, who makes extremely good money, I asked him, what are you doing with your money? And we're on FaceTime, and he takes me into this hidden closet, and he opens up the closet, and I'm telling you guys, there's like hand grenades and AK-47s and all this stuff, right? He runs a protection company, but he takes me to the safe, and he opens up the safe, and there's just like gold bricks in the safe. And I said, bro, this is where's the rest of your portfolio? Where's the rest of your money? And he says, Jay, this is how he talks. Jay, this is where my money is at. It's in these gold bricks. So if stuff hits the fan, I'd be able to take my gold and run with it. And I said, this is not a strategy, right? This is cool. This is cool to post on social media and stuff, but this is not a strategy. Let's get you to a place to where your hard work starts to work hard for you. We're working with another incredible entrepreneur. He runs a great construction company here in Southern California. And the same thing, his business is doing multiple 6 figures a month, and he is, paying himself pretty handsomely. And I asked him, well, what are you doing with your money? And he tells me it's in a shoebox underneath his bed. And I said, well, how much is in there? And he says, well, I got a couple, I got like $100,000 in a shoebox. And again, you guys, please understand this. The route to your prosperity is going to come down to your plan. And that's what I didn't know before. If we rewind the tables 10 years ago, I didn't know that. In fact, I didn't have a plan. I knew how to make money, but I didn't have a plan. So there's four parts of becoming wealthy and building to $1 million portfolio. Listen to me well, because unfortunately, you and me were most likely only taught the first part. And if you're missing any of these other four or any of these other three, then you are going to struggle. You'll have the ability to make a lot of money, right? But the ability to grow it is probably going to be lacking for you like it was for me. So the first part is you have to learn how to build skills that you can trade to make money. And if you say, well, how do I make more money? Then the answer is you have to learn to build more skills. And as you start to stack, accumulate, acquire, multiply these skills, then you'll be able to trade them for more money. This is why when I first got out of college, I went to go work for a travel agency, and I literally worked in the mailroom. I was a guy in the mailroom stuffing the envelopes, getting paper cuts all over my hands, having all the pretty women in the company laugh at me because I'm the black dude in the very back in the mailroom by myself. I remember it like it was yesterday. My manager was this guy from Australia because I worked for Quintos, an Australian traveling company. So what sort of skills do I need to open up envelopes and stuff paper in there to put a stamp on it and send it out? So I had the skill of making money. I didn't make a lot because my skill set and my value wasn't that high to the marketplace. But most of us learn how to make money, right? Number two is how do you manage that money? And I'm going to talk about it today because this is an area that's probably lacking for you. Now that you're making money, how do you keep it? How do you manage it? And it really comes down to you telling it what to do, because right now it's managing you, which is creating stress and anxiety. Number three is how do you grow that money? Now that you're managing it well, how do you find vehicles outside of gold bricks or putting this money into a shoebox underneath your bed? How do you find vehicles that's going to grow this money at 8%, 10%, 20%, 30%, 100% interest on that money? And number four is how do you protect the money? How do you keep Uncle Sam legally from taking all of your hard work? So let's dive into it, because I want you to walk away from this saying, man, that was one of the greatest things I've ever heard. So let's talk about part one and the truth about six-figure income. When I was growing up with all my buddies, like six figures was a creme de la creme. If we could get to a place where we were making $100,000 a year, man, that was like, we have made it. I don't know if you're like that, but we were like, we're made it. And I just always consider six figures like 100,000. I didn't know that 200,000 a year was still six figures and 900,000 a year was still six figures. Six figures to me was always $100,000 a year. But what I learned right away is that honestly is not that much money in today's economy. $100,000, $8,000 a month roughly isn't that much. And we start to fall into what I call the middle class trap. You guys know that trap? Where that your lifestyle starts to creep up on you. I call it a lifestyle creep. That every single time you make more, you go on and you spend more. There's no planning and there's no leverage. So this is why we need to shift from just being an earner and a consumer to a builder. So let's dive into it. So here's the 6-phase roadmap to build 100 million net worth. Now, I started this journey to build towards my first 100 million in net worth. And it took me, I thought it was going to take me like 5 years, and it ended up taking like 5.5, 6 years. So time is on your side. But even if it took 15 or 20 years, how many of you guys would be cool? I'm sorry, I'm raising my hand like I'm so used to speaking on stages. When I ask some questions, I raise my hand. But how many of you guys would be cool if in the next, 15 years you built $1 million portfolio? 20 years, 25 years, like it's, I think for most people it would be fine. So here's phase number one. We need to get control of your cash flow. So you're making money, I'm making money, we're all making money that's out there. And here's what you need to know. It's not so much about how much you make, but it is more about how much you keep. And the way you start keeping your money is you take control of your cash flow. Now, for about 8 years, I have given a very simple framework for how to do this. In fact, I wrote about it extensively in my first book, The Richest Man in Direct Sales, where I gave you a framework of 70-10-10-10 strategy, meaning you need to get your living conditions down to 70% of whatever it is that you're making right now. And then we need to take 10% of that and we need to invest that 10% of your income. The other 10%, we want to save that. And the last 10%, we want to give it. So let's talk about it. My goal is how can you get your living expenses down to 60% so that you can start to invest 20% of your income every single month? Because you're not going to be able to build $1 million net worth portfolio by just working or by saving. You're going to build that by investing. So we need to now start to track and start to put boundaries around your spending and start to tell this money how much of it that it's going to be spent within that month's worth of time, instead of looking up at the end of the month and said, oh my God, my money is spent this much, right? Haven't you ever felt that? You're like, how did my money spend this much? Your money is going to spend as much as humanly possible until you start telling it how much it can spend. Think about your money as like like a family member, right? That has unlimited access to your money. That family member is going to spend as much as humanly possible until you tell them how much they can spend. And it's not their fault. It's your fault. It's not their fault that you haven't given them structure and boundaries on how much of your money you could spend, that they could spend. It's your fault if they spend more than you would like them to. So when you look up at the end of the month and you say, oh my gosh, my sister spent all my money for the month. I was like, bro, you didn't tell her how much she could spend. So you need to tell your money, put boundaries around your money. Phase number 2 is build the 3 financial buckets. And I have built a whole framework around these 3 financial buckets. When I look back 10 years ago, I was lacking these buckets. I wasn't thinking in terms of these 3 buckets that I'm about to tell you about. What's up, fam? I hope that you're enjoying this episode. Listen, I want to invite you to a 3-day experience that you will never forget. We call it Master Your Money Challenge. Let me break it down for you. If you're at a place in your life and in your business right now to where you're doing well financially, but you know there's an entirely different mountain to climb, I want to invite you to spend 3 days with myself and my team as I help you not just figure out how to make more money, but exactly in specific steps on what to do with it. Day 1, you're really going to learn how to get clear on what it is that you want to do, the goals that you have in the future, and then we're going to build your own personalized financial roadmap. Day number 2, you're going to build the 3 plans that have gotten me to making multi-millions in investing, to where we really focus on being safe, being comfortable, and building a plan for wealth. And then on day 3, we're going to dive in and really go through all the different investing vehicles, which is going to be best for you and give you the greatest maximum returns. Go ahead and click the link right here in the show notes, and we hope that you join us. We'll talk to you soon. I want to invite you to pick up my new book, The Freedman and the Oak Tree. Now, I wrote this for people who are in sales and business and coaching and consulting, or you just want to accelerate success in your life, whether that be in finance or even in investing. Now, it's more than that as well, because I wrote it as a historical piece. And so what you're going to get is this beautiful story of sharecroppers really taking something that's minimum in figuring out the 5 laws of leverage to turn it into something where they can leave generational wealth. If you're into beautiful stories, and if you're at a place to where you want to level up your career, your business, or your finances, you want to get this book. Now, the secret is also we are turning this book into a film, so you're going to be able to see it on the big screen as well. Go on and grab this book and share it with at least 10 other people. So the first bucket is your bucket of safety. This bucket of safety is going to include things like your emergency fund, your life insurance policies, your car insurance, your health insurance. But the thing is just going to keep you and your family safe should stuff hit the wall, right? Is that what they say? Should stuff hit the wall. Now, your second bucket is your bucket to be comfortable. And your bucket of being comfortable is going to include your index funds, your dividend stocks, your 401k, like these things that's going to be able to grow for you and allow you and your family to have a comfortable life. And your third bucket is your bucket to be wealthy. And what I see as I'm working with people is oftentimes you're all over the place. You're jumping all around. Like I got a little bit of stuff in my comfort bucket. I got a little stuff in my safe bucket. I want to do all of the sexy things to get into my wealthy bucket. And it's like, nah, bro, like you got to take it in a step-by-step format. So phase 3 is if you have a home, then you can use that home as a wealth tool. If you don't have a home, then it's one of the first things that we want to do is get you into your first home. Here's the crazy thing. I have Tony sitting right here. Tony, say what's up. Tony can't hear us. He's locked in. So I took Tony to the first house that I ever bought, which I still have. And what I was telling him was how important it was. Like I knew that we weren't going to be living in that house. My plan for buying a house was that we can move into it for 2 years. It's called house hacking, by the way. We can move into it for 2 years. Then in 2 to 3 years, move out of it and start renting it. And then we would just do that for like the next 5 years or so. Move into a house, move out of it, rent it, move into another house, move out of it, rent it, move into another house, move out of it, renting. House hacking. So in this house, I bought it it was the first piece of property of my portfolio. And I bought this house for maybe like $420,000. And that was 10 years ago. Now that house is worth over $800,000 and I rent it out and I have great cash flow on it. And that was the first piece of property. So if you already have a home, then we can use that to do strategic plays. And if you don't have a home, get into your first house. And don't try to get the sexiest house. Do like I did with my first house. I saw a neighborhood that was one of the better neighborhoods in that area. And I literally bought a house that was beneath the train tracks in that area. I bought one of the worst houses in that area because now that area is going to appreciate and your home's value is going to appreciate with that as well. So think like an investor. You can get into your first home and you can house hack. If you already have a home, then you can utilize things like HELOCs. HELOCs are great tools, but not to cover your butt because you made a lot of terrible decisions. I have a lot of students that I work with and they talk to me about HELOCs. And I'm like, well, I love HELOCs, but I don't love it for you because you have not demonstrated the ability to have the proper fiduciary habits. Right now, you want to use this HELOC as a Band-Aid for the poor decisions that you've made. No. Work your way out of those poor decisions. And if you want to use the HELOC so that you can go buy more cash producing assets, then do that. But do not use a HELOC as a Band-Aid because you have taken on more debt than you should have. Phase number 4, let time and compounding do their job. Here's my goal for every single student that we work with to get them to a place where they're investing at least $2,000 to $3,000 per month. And if I invest at least $2,000 to $3,000 per month on average at a 10% interest rate, which we've seen the S&P 500 track about 8 to 12%, 10% annual interest rate, well, I'm only 15 years away from having about $800,000 in an investment account. That's only 15 years. If I extend that another 10 years, then I'll likely have about $2 million of net worth. Isn't that crazy? And that's not even counting in the real estate if you already have a home or that first property that you're going to buy. So just like that, boom, all of us, you included, will have that first $1 million portfolio in the next 10 to 20 years. It is absolutely possible. I love this for you. I'm getting so excited. Phase number 4. Oh, we just talked about phase number 4. Let time and compounding do their job. Phase number 5, get in the right rooms. I cannot stress to you enough about how important mentorship is, mastermind, and coaching. You can't out-earn a broke circle. Somebody asked me the other day, they said, what is the best mastermind group that you've been in that you paid for? And I said, I don't really have one that I paid for monetarily, but the best thing that ever happened to me was I was asked to join a group that was going to be part of the team that was going to take a company from about $500 million a year business to a $2 billion a year business. So I was part of about a 7-man team. I was part of about a 14-person team. And I remember even when I was asked to be part of this team, I had some what do you call that? Imposter syndrome. At the time, my business wasn't doing, we were still beneath $1 million a month in revenue. And I think my income was maybe, I don't know, man, maybe I don't know. I forget what it was, but it wasn't like, I remember being a little bit embarrassed about where I was in relation to where other people in the group were. And I remember thinking, why was I asked to be a part of this group? Like, what value do I bring? And I would tell you the 2.5 years that I had with those people was the best mentoring and coaching that I've ever had. I just got to be a fly on the wall. I just got to hear how they thought about things, how they thought about money, how they thought about investments, how they thought about investing in things that they didn't have the money for, how not having the money never stopped them. They said the money is not the problem. And I remember sitting in the back of the room saying that money is not the problem. You just said you needed $6 million. And they said, well, the money is not the problem. The idea is the problem. I was like, what? They said, if we have a good enough idea, we can raise the money. That was new for, I'm just telling you, man, listen, I'm welfare to wealthy, right? Like, that was new for your boy. I like $6 million, that sounds difficult to me. But for them, it wasn't a problem. I will tell you, getting in the right rooms can save you so much time and money, but can also elevate you because you are going to start to adapt to and adopt the principles, the values, the norms, the customs, the cadence of these people that are higher level. Phase number 6, bonus accelerators. What I mean by this is oftentimes when I'm working with a student, they may be making good money, but I want to accelerate the amount of money that they're making. And so we will almost always find a way to where they can make more money outside of where they make the majority of their money. So if they're working a W-2, if you're working a W-2, I'm always looking for ways to have a side hustle, to build a personal brand, to use tax strategy to protect income, to look around the house and look at a whole bunch of stuff that you don't want and don't need that's extremely valuable that we can sell, because any extra income that we can gather up to now start to pay down debt or to start to invest with over time, it doesn't seem like it's a lot. but a dollar is not a dollar. And if I can find a way to bring in an extra $1,000 a month, that $1,000 is not not $1,000. What that is additional $12,000 a year at 10% interest over the next 20 years. And that is a tremendous amount of money as you start to factor in compounding. So how can you accelerate your earnings? Let's move to part three. The mindset shift that you are going to need. Okay. So wealth is built in your habits, not your income. It is about not being sexy, but it is about consistency. Oh my goodness. I just want to preach on this one. I was just telling Tony yesterday that when I started this journey in 2015, my first 3 rental properties that I bought collectively were not more than $65,000. Each of them were about $20,000. I bought a whole house for $20,000. 3 bedroom, 2 bathrooms. And I remember some of my closest friends, dear friends at the time, making fun of me because it wasn't sexy. Nothing about me is sexy. Maybe my wife might find something about me as sexy, but like when I'm dressed right now, this is super basic, right? Like my investments are not sexy. The business that I built, that I invested $200 in, that became a multi-million-dollar business, was not sexy, right? So like the first piece of property that I bought that I just told you about, if you saw it, it's not sexy, but it has doubled in value and it gives us cash flow every month. The first 3 rentals I bought were not sexy. Okay, but they worked. So you don't need to worry about like looking a certain way. It is about your habits. It is about what are you doing on a daily, weekly, and monthly basis, and how long can you sustain doing those things? Because that is how wealth is going to be built. It's not built on income. You need a wealth identity before you ever hit, 7 figures. And a wealth identity, what I mean by that is it's not about the million necessarily. It is about who you're going to have to become in order to have that portfolio. And the person you're going to have to become, in fact, I ask you, who do you, if I said write down 5 bullet points on who you will need to become in the future to have that $1 million portfolio, what would you say? What would you list down for yourself? For me, who I was going to have to become is I was going to have to become an extremely structured and disciplined human being. I was going to have to become someone that didn't care about fitting in with the Joneses and didn't care about what other people thought of me. That was really hard for me. And in fact, it still is not as hard for me now, but it still gets to me sometimes, right? Because we all want to be liked and loved and all that stuff. But I really needed to develop the calluses on my ears and on my brain to just not care what other people thought. I needed to become the type of person that really, really cared on staying in my lane and what did Jamil think, right? I needed to become the type of person, I needed to become a better leader. I needed to become a better reader. I needed to become someone who had the ability to have a lot more delayed gratification. I needed to become someone that developed the sense to having way more patience. And I definitely needed to become somebody who was willing to take more risk. I was risk adverse before. And now I think it drives my wife crazy. I take massive swings. Massive swings. And that's why my portfolio hasn't just grown to 1 million, but it's grown to where it's at right now, because big risks do correlate with big rewards. I've taken massive risks in business and investing. You don't have to, right? I told you in the next 15 to 20 years, just from doing this, you're going to build $1 million portfolio. How I did it in 5.5 years is because I learned to become the type of person that was okay with taking more risk. But this is about you. What do you need to do? What are the 5, 10 things that you need to do or need to become to now have your first $1 million in a portfolio? So it's not about the million. It really is about what it makes of you. I think in closing, once you have your first 100,000 invested, it becomes easier to get to $1 million. And once you have your first $1 million invested, it gets easier to get to 5 million because of the compounding interest. And once you get to 5 million invested, it's just time after that. Because in about every 7 years, that 5 million is going to double. That 5 million is going to go to 10, and then it's going to go to 20. And then that 20 is going to go to 40. Then that 40 is going to go to 80. And then that 80 million is going to go to 160 million. You see how it works? This is why you want to have massive delayed gratification and try to really get as many of those dollars to be invested as soon as humanly possible. Now, as we depart, I definitely want to let some of you guys know, because some of you guys are thinking right now it's too late for me. And what I am telling you is it is not. That is a fallacy, and allow for Jamil to help you massage that out of your spirit, because that's an evil and that's an ugly spirit, and that's just a spirit of not knowing. Because it is not too late for you. If you're breathing and you plan to continue to breathe, then we got to start investing like ASAP. So if you guys have loved this episode, I wanted to bring you a tremendous amount of value. Go on and like this. Go on and subscribe to the channel. And one of the best things that you can do, we have an each one teach one spirit here, is take this episode and share it with a handful of friends that you like and that you love. And I encourage you to really join our next 3-day challenge that's going to be started soon, so that we can spend more time with you. Until the next time, let's build wealth together. We'll see you soon.